Investment banking is one of Wall Street's most coveted roles. It is also one of the hardest. It is no surprise that the average day in an investment banker's life is long and stressful. Those who manage to survive the adjustment period often go on to have long and financially rewarding careers. Investment banking analysts may work up to 100 hours per week at some firms. Welcome back to another episode of Facultive Station. Get involved and join the community by subscribing to the channel so you never miss any of our latest uploads. In this video, we're going to be taking a look at what it's like to be an investment banker. Let's get into it. The role of an investment banker. Investment banks help companies and governments raise capital by issuing stock or borrowing money. They also act as advisors and go-betweens on mergers and acquisitions. The capital markets are a fast-paced, high-stakes, and highly regulated environment. Companies and other industries need investment bankers to handle financial deals while they are otherwise occupied. Who needs them? Investment bankers are hired by young companies planning to go public, big companies planning mergers and acquisitions, and established companies that want to raise money for major expansions. The professional bankers are the link between the company and investors. For example, in 2019, Goldman Sachs handled the purchase of Tableau software by Salesforce, the sale of Ultimate Software to a private equity consortium, and the sale of Symantec's enterprise business to Broadcom. Social skills wanted. These firms also have trading and sales divisions, but the traditional role of an investment banker involves meeting with clients, preparing offers, running financial projections, and working on pitch books, the sales books created to draw in new clients. What separates investment bankers from most others in the financial industry is the requirement for excellent social skills. Plenty of business students can perform the technical functions of an investment banking associate, but few have the stamina and the social graces to deal effectively with clients. Having the right personality goes a long way. Morning routine. A new associate who gets past the initial chaos and jitters of the job settles into a functional routine. The mornings are usually filled with emails, text messages, and office meetings. The messages can be a nightmare, quite literally. There are stories of analysts at JP Morgan waking up in a panic during the night to check their phones because they run the risk of being fired if they do not respond to every one of them within 15 minutes. The messages may come from clients, co-workers, or senior bankers who want every status report, presentation, and calculation double and triple checked. A late start. Fortunately, the workdays start rather late. This is partly because the New York capital markets are not open at 7 a.m., but it is also because most bankers were at the office until midnight the night before. An associate may have time to shower, eat breakfast, and even work out before heading to the office. Since the vast majority of investment banking jobs are located in cities, many face a long commute. Morning work is often slower and more methodical than evening work. From about 9:30 a.m. until lunch, associates and analysts work on company analyses and make adjustments requested by senior staff, who have spent the previous evening reviewing the day's work. On slow days, a junior banker may have time to catch up on the news and sports. But there is not much opportunity for social media since most investment banks put up firewalls to block distracting websites. Afternoons. Unless the day is very busy, lunch is a leisurely 45-minute or hour-long stretch at a local deli or the company cafeteria. These are usually spent with coworkers on the same level. The hierarchy tends to be rigid. The associates usually return to their desks to find updated models and presentations from their team's analysts. The associates review these documents and make corrections or recommendations before sending them back to the analysts. This is a stressful process for associates who desperately want to prove they can contribute to the deal, and analysts who know what the managing directors or directors need and don't have a ton of time for revisions. The live deal. Afternoon work is focused intently on the active deal. Many investment banking teams are assigned one deal at a time, or the live deal, and senior bankers are meticulous about details. Initial public offerings, IPOs, and merger and acquisition, M&A deals involve millions or even billions of dollars, and the firm cannot afford to make mistakes. Evening. The second half of the workday is divided into two segments, before and after dinner. Dinner is almost always eaten at the office. The work before dinner is more scheduled and predictable, and analysts demand that the work of the associates be completed by early evening so it can be reviewed again. On a normal day, the first post-dinner task is reviewing the morning's work. Analysts and senior bankers spent the past several hours going over material and creating comments, which sometimes require massive revisions to the pitch book. Investment banking associates and analysts work with many other professionals, such as equity research and sales staff. The software crew. The evenings, however, are closely spent with the desktop publishing crews. Desktop publishing, DTP, in investment banking, is a division filled with professionals who know how to use PowerPoint, Photoshop, and other software to communicate dense financial information effectively. Analysts rely heavily on this team to make revisions to pitch books and other marketing materials. The revision comment correction cycle might repeat 2 or 3 more times before the night ends. Associates and analysts have to think and work quickly to ensure that edits are done correctly and on time. Many banks have company car services set up to take associates and analysts home in the early hours of the morning. Senior bankers may get away by 10 p.m., but junior bankers normally slump home in the early hours of the morning to get a few hours of sleep before doing it all again the next day. What can you expect in terms of career progression? Analyst, 0 to 3 years at the bank. Completes core tasks in relation to the business of the team. Associate, 3 to 6 years at the bank. Closely supervises and assists analysts in completing core tasks. May get to attend some client meetings and pitches. Director, Vice President, 6 to 9 years at the bank. Monitors the day-to-day work on transactions done by analysts and associates and is responsible for this work being completed. Is also involved in winning work from clients. Executive Director, Senior Vice President, 9 to 12 years at the bank. Focuses on winning business from clients and is expected to generate a certain amount of revenue. Is accountable to the managing director and senior management for work in relation to business one being completed. Has some budgetary responsibility. Managing director, 12 plus years at the bank. In charge of a section of the bank's business, which could be in relation to a particular product, a type of client, or a region. Has ultimate responsibility for building that business, making sure it prospers, and managing the team carrying out the work. Senior management, 15 plus years at the bank. Has control of a key segment of a bank's business, such as a geographical region or product area, like equities or fixed income. May also manage a key part of the bank's operations, such as its financial position or risk exposure, or an initiative such as diversity. Career options after working in an investment bank. Rather than staying in an investment bank, some people choose to move to use the skills and experience they have developed in another related area of finance. If you start your career at an investment bank, there's scope to move to an asset management firm after a few years and progress there. A particularly common move is to move from an investment banking sales trading role, which involves advising asset management firms on which companies or other assets they should invest in, to a buy-side role at an asset management firm, helping to make these investment decisions. Private equity. Moving to and progressing in the private equity industry, where firms specialize in purchasing companies, reshaping them, and selling them out for a profit, is a popular move for those who start their careers in investment banking. Moving to a private equity firm is particularly prevalent among those working in mergers and acquisition roles at investment banks, as corporate takeovers are a key element of the business of a private equity firm. Hedge funds. Some of those who start their careers in investment banking go on to join hedge funds, which use complex investment strategies involving a range of assets in the hope of high returns. Entrepreneur. The finance and business knowledge and skills that graduates acquire in investment banking are a great basis for setting up and growing a new business. With that, we've reached the end of today's episode all about what it's like to be an investment banker. Does anyone here watching want to choose investment banking as their career? Get involved and let us know in the comment section down below. If you enjoyed this video, remember to leave a thumbs up. Plus, if you want to see more fantastic finance and accounting content just like this, remember to subscribe to the channel and check out our other socials such as Instagram and TikTok that are listed in the video description. We also have a course available for anyone looking to succeed in the world of finance. Check out the link in the description to find out more. As always, thanks for stopping by and watching. We'll see you again soon in the next one.